Welcome to the afternoon market review. Let's talk about US dollar. We expect the policy statement of the March FOMC meeting to be fine-tuned, with the description of economic activity being lowered from robust to moderate to reflect the slowdown in economic growth caused by the weak consumption in the first quarter. Risk-related language may indicate that the economic outlook is highly uncertain rather than just uncertain. Inflationary pressures will be mentioned, but the possibility of substantial adjustment will be limited to avoid the policy stance being overinterpreted. Quantitative tightening is expected to be clearly suspended until the debt ceiling is resolved, with the restart time possibly postponed to the second half of 2026, consistent with the signals released in the minutes of January meeting. Next, let's talk about crude oil. The escalation of tensions in the Red Sea over the weekend was a key driver of Monday's rebound in the oil prices. As major producers such as Saudi Arabia and Iran border the region, a tax on ships could raise transportation costs and amplify the supply risk, factors that objectively support the rise in the crude oil prices. However, oil prices retreated from their highs due to the prospect of a resolution of the Russia-Ukraine war. If the US-Ukraine Resource Development Agreement makes progress, the market could further price in the potential return of the Russia oil, which may put a short-term pressure on the prices. Last but not least, let's talk about gold. The stock market sell-off and rising recession fears are driving investors towards the gold, while silver sales plummet due to the higher cost. Concerns over a US recession are mounting as the S&P 500 declines and hedge funds reduce risk. The US 10-year and 2-year Treasury yield curve is normalizing after being inverted since 2022, historically signaling a recession within the 6 to 12 months. Despite a strong stock market earlier in the year, gold remains the preferred safe haven as asset, with US gold ETFs are seeing record inflows amid the economic and geopolitical uncertainty. Thank you very much.